Hello, welcome back to another video. In this video, we'll explore how inventory management in Microsoft Dynamics 365 supply chain management connects with various modules in business, helping streamline operations and improve strategic planning. We'll break down each interaction with real-world example so you can truly understand the value of a connected supply chain. At the heart of every supply chain operation, there is a big role of inventory management. Think of it as the brain of your warehouse. It knows what stock you have, where it is, and how it moves. Let me give one example. A retail chain like a Target or Walmart needs to track thousands of SKUs. SKUs means the stock keeping unit across stores and warehouses. Inventory management ensures accurate stock levels to avoid overstocking or running out. Now let's walk through each module connected to inventory management in a diagram and what role it plays. In the right side top corner, you can see there is a box which is connected to inventory management, that is the purchase orders, and one arrow is there. Inside this arrow you can see one text receipts. So what is actually mean by this receipt? The purchase orders represents the incoming inventory received from the external supplier. When goods are delivered, they are recorded in the inventory management as a receipts, increasing the available stock. This action often triggers the quality control, also location assignment, and the financial posting. Let me give one real world example. For example, a retail company like the Best Buy orders, it orders 100 or 1000 smart TV from the Samsung company. So when the delivery arrives at the warehouse, the items are scanned in and inventory level are automatically updated through the system to reflect the new stock. Now let's go to the second box, that is the vendor returns, and there is an arrow and within it there is a text called issues. So what does it actually means? In vendor returns, inventory is removed from stock and sent back to the supplier due to the defects, overstock, or incorrect items. The system reduces the item count and may initiate the refund process, replacement, tracking, and the financial reconciliation. Right. So let me give you a real world example. Out of 1000 smart TVs that you have received in the earlier example, 50 have cracked screen. So on that case, the warehouse processes a vendor return and reducing the inventory and sending the faulty units back to the Samsung. Okay, now I hope the vendor return process is now clear how it is connected to the inventory management. Now the next box, as you can see, that is the sales order, and there is a arrow, there is also text like a issues. What does it actually mean related to sales order? It means sales order reduces the inventory as products are picked, packed, and shipped to the customer. The stock issue is linked to sales revenue and trigger cost of goods, that is COGS, cost of goods sold, posting in the financial system. Let me give you one example related to the TVs. Example, a customer places an online order for 3 televisions. The warehouse picks the items, ships them, and inventory is automatically updated to reflect that 3 TVs have left stock. So this is the process of the sales order related to inventory. Now let's talk about the customer returns, and you can see there is a text called receipts. So in this particular receipts, what happens when the customer returns item, those products are received back into the inventory. The system may place them in a quarantine location pending inspection, or immediately restock them based on the condition. So if that item that is actually came back or returned, that you have to quarantine and you have to check or inspect that it is ready for restock or it is broken. Then you have to decide that point, and based on that you can actually work on that. For example, now let me give one example. One of the 3 TVs the customer ordered is returned due to the wrong model. The item is inspected and restocked, increasing the inventory again. Now let's discuss about the project sales orders box, and there is an arrow with the issues. What does it actually mean? It means item issued from the inventory for use in a specific project rather than for the customer sales. These goods are consumed as a part of delivering the project based service, and the cost is tracked against the project budget. Let me give you one example for the project sales order. A construction company issues 500 light fixtures from the inventory for use in a hotel renovation project. These are not sold but used internally, which actually reducing the inventory stock. Now let's talk about the other part, that is the inventory or warehouse management. And in the arrow section you can see it can be a receipt or it can be issues. What does that actually mean? This represents the internal inventory operations like transfer between warehouses, cycle count and adjustment, stock reclassification or quarantine. Inventory management keeps an accurate location and the quantity data through this internal transaction. Let me give one example. A warehouse in Los Angeles transfer 200 TVs to a distribution center in Chicago. So inventory levels are adjusted in both locations accordingly. Now let's go to the next box, that is the production order picking list. And here you can see there is a arrow with a issue. So what does actually mean meaning of the issues here? So meaning is the materials and the components are moved from from inventory and sent to the production floor for manufacturing. So these are marked as issued and tracked as a part of the work in progress. Okay, let me give one example here for the manufacturing one. A PC or personal computer manufacturer issues 200 CPUs, 200 motherboards and 200 RAMs module to assembly line to build custom desktop. So on that real world scenario, there is a production order and picking list will happen, right? Again, now we'll go to the next part, that is the production order and report as finished. So in this case, as you can see, this is nothing but the receipts. So what does that actually mean? Production order and report as finished. It means when a production is ordered, when a production order is completed, the finished goods are received into the inventory. These products are now available for sale or project use. So financially, work in progress is converted into the finished goods value. Let me give you one example. The 200 custom desktop now fully assembled and tested, they are added to the inventory and ready to be sold. So in this case, inventory will go up, right? On hand quantity will go up and it will be ready to sold. Now let's go to the next box, that is the general ledger. In this case, what is happening, you can see there is a financial transaction text is there. What does it actually mean? We already discussed in purchase order as well, but here we'll discuss about with respect to the inventory management. Every inventory transaction has a financial impact. Receipts and issues result in posting to be general ledger, including the inventory valuation, COGS and adjustment, right? So this integration ensures your financial books always match your physical stock. Let me give one example so that you can understand. When 3 TVs are sold, the system automatically reduce the inventory value and record the cost in the general ledger, reflecting the accurate profit margins. And let me talk about the last one in the diagram, that is the project purchase order. And as you can see, we have a receipt in the arrow. So these are the special purchase order where the inventory received is tied to a specific project, not general stock. Items are immediately linked to the project and costed accordingly rather than being held in the general inventory. If I'll give one example, then this the whatever I said, it will be clear to you. A telecom company buys 100 routers specifically for the government IT infrastructure project. Upon receipt, they are recorded directly under the project, not general warehouse inventory. So this is how it happens. Why it matters? Each of these interaction ensures the real-time visibility, cost tracking, accurate operational execution with inventory management at the center. Businesses using Dynamics 365 can streamline workflows, avoid stockouts and reduce waste, right? And make better strategic decision. Now let's summarize the key benefit business gains through this connected ecosystem. Number one, real-time inventory updates. Number two, reduce the stock outs and overstocking. Faster order processing, better financial visibility, smarter planning using the predictive insight. So that is a quick overview how inventory management interacts across your supply chain using the Dynamics 365. Whether you are a retail, manufacturing or distribution, understanding this connection is very much crucial and key to the operational success. So thanks for watching this video. If you have any question, you can write it in the comment section. I'll try to respond as soon as possible.